So let me first start with a, already having a little difficulty here. There we go. The views expressed by the speakers at CAMA webinars are those of the speakers only and may not reflect those of CAMA, its members, or employees. CAMA does not guarantee the accuracy of information provided by the speakers or attendees. Professional advisors should be consulted before implementing any options presented. CAMA absolutely does not endorse or recommend any individual organization, including the speakers. CAMA, its members and employees do not accept liability for losses and or damages arising from errors or omissions within reliance upon or any use of information provided by the speakers. Individuals are strongly encouraged by CAMA to conduct their own due diligence before making any investment choices. CAMA does not act as nor offer the services of an investment advisor, CPA, realtor, or attorney. If tax, legal, accounting, investment, or other similar expert assistance is required, the services of a competent professional should be sought, and we recommend you do that. So now I've got the attorney information out of there. Let me talk a little bit about Chris, whom I've known for 10 plus years. His expertise and knowledge in the precious metals venue is top shelf. His vast experience, noted in the slide, shows he has an understanding as well as the wisdom to provide the information needed not only for novices, but also experts in the financial sectors. Neptune Global and CamaPlan have streamlined purchasing precious metals in your IRA, 401k, Coverdell, and several other tax advantage plans. Chris patented the precious metal composite that allows you or your IRA to purchase 4 metals at one time. I'll defer to Chris to explain more about this product, as we have seen its popularity soar in the past few years. And that's one of the reasons I've asked Chris to take his time today for that. Chris speaks internationally and is interviewed by all the major financial TV shows and national newspapers, as you can see. He's married, has 2 sons. He likes boating and helping others. As a good friend of mine, I'm very appreciative of him giving us this time to discuss the value of precious metals in today's environment. So, Chris, thanks for being here tonight. How are you doing?
I'm doing great, Carl. Thanks for having me on.
And I hear you're down in Palm Beach?
Yeah, Palm Beach County. So it's nice and warm down here. And I was talking to my wife just today, and I know I think it's been in the 30s for the last 2 days. So I'm enjoying it.
All right. That's great, but I don't think our audience wants to hear about you, especially if they're not in sunny South Florida enjoying it. So what I'd like to tell everybody is if they have questions on putting precious metals in their IRAs, contact CamaPlan and we'll help you get that done. But at this point in time, I think everybody would like to have Chris be the presenter and tell us what you're going to talk to us about and the do's and don'ts of precious metals.
Okay, that's great. Can you see my screen, Carl? I think I'm switched over, and hopefully my screen is showing.
Yep, I do see it, and I see your slides off to. There you go. We're ready to go. You got a whole bunch of gold up there.
Good. All right, so folks, thanks for coming on tonight. I really appreciate it. I haven't done one of these in CAMA for a while as far as a webinar, but we've been active with CAMA, and as Carl mentioned, business is very good, and particularly with one of the items we'll be talking about that is really optimized for investors. So just a little bit, I'm going to be sharing some opinions tonight. I'm not giving a recommendation of anything. I'm just food for thought, something that you can, take and use in your due diligence and see if precious metals make sense for you. Just real quickly, we are not new. We're headquartered in Wilmington, Delaware. We are celebrating our 17th year in business. We are a full-service precious metals dealer, meaning we make a market in all the traditional bars and coins, as long as it's good bullion. But we're also the developer of innovative products, including a patented product, which we'll mention in a little bit. Carl was nice enough to say that we've been invited on a host of shows for the last 10, 15 years as subject matter experts regarding precious metals and the markets in general. And that's been a great way for people to learn about us out there. So as I said, some of you may have experience with precious metals and you've dealt with bars or coins, or you're considering it and you want to know, do precious metals make sense for you? And there is a chat box, so I think that during the course of our talk, you can enter questions as we go along, and I will be glancing over there. So, bars and coins, some people, just simple things, and forgive me for those who know this, but some people aren't aware. They think of things like coins as being different than bars. There's different types of coins. There's what they call numismatic coins, which really isn't precious metals investing. That's more investing for rare coins, and they're actually not even allowed in an IRA. But what's allowed in an IRA is bullion, and bullion comes in all sorts of forms. They come in bars of different sizes, and there's what they call bullion coins. Those are coins that sell for only a small premium over the bullion content. So, one of the things when people are learning about the metals is, don't be confused. Bullion is bullion, and it comes in both coin and bar form. Then, depending on which one is right for you, depends on your objectives, things like where it's going to be stored, what's your time horizon for selling and price targets. And, we'll talk a little bit about that later, and of course, you can enter that in the chat box. Now, one thing that we do, and we have done with Cama for a number of years, we also have products we call the Vault account, which again, they're pure bullion. We offer a version called the Gold Vault account, which is the ownership of gold bullion, silver, and this PMC ounce. Now, one of the things that are very advantageous about the Vault accounts are the metal is all what they call good delivery bullion. It's bullion that meets the highest standards, most liquid bullion in the world, but the price per ounce is more competitive, meaning the premium over the bullion price is lower on the Vault account than it is if you buy individual bars and coins, especially the smaller bars and your common coins like the eagle and the maple leaf. Now, so the Vault accounts are turnkey accounts that are held in a depository. And for an IRA customer, that's obviously quite ideal because you can't take delivery of your bullion. So, these are advantageous products that let you own good delivery, pure bullion, but you're getting more metal for the money. And since these are meant to be stored in the depository and IRA accounts are held in the depository, it makes a lot of sense for IRA holders. So, again, we have a gold version, a silver version, a PMC ounce. Now, first, a little bit, for those who are wondering, why would you own precious metals? Now, there's a lot of disinformation and misinformation about precious metals, and some will say it's almost by design. I mean, at the end of the day, gold, we'll take gold first, is money. Okay, it always has been money. Now, they'll tell you that, well, it's kind of antiquated and it's not used anymore, and I'll show you how that's really not the case at all. Now, why is that advantageous for you as an investor? Right? Gold and precious metals have always been a store of wealth. Paper money has always eventually failed. And when it's not failing, it's devaluing. And that's true for the US dollar. They call it inflation, but the reality is it's devaluing. Okay, the reason a dollar doesn't buy the reason a mid-sized car costs much more than it did 10 years ago and 15 years ago and 20 years ago is because the dollar is devaluing. That's just the facts. Second point is physical precious metals, which is what Neptune Global deals in. We do not deal in exchange-traded products and derivatives. is a tangible asset that can be directly owned by its owner. And that's a great advantage. So many investments you can never be the direct owner of. You have to buy an exchange-traded product. An example is, especially in the world of commodities, if you wanted to be in the oil sector, if you thought oil was going up, you really can't buy oil and hold on to it. So what you do is you either buy a proxy like a company like Exxon, which is in the oil space, or if you wanted to actually buy oil, the closest thing is you'd buy futures contracts and other high-risk instruments, but you'd never actually own the underlying commodity. Precious metals, you can, and that's an advantage that should not be dismissed lightly. Also, precious metals are highly divisible. Now, I know a lot of self-directed IRA clients are with self-directed IRA firms because they've used and they've bought real estate in their IRAs, and that's great. Now, one of the advantages to having precious metals as a overall portfolio is some of the advantages for precious metals versus real estate is it's more divisible, right? You can buy $100,000 of precious metals and sell it off an ounce at a time. It's portable. You can move it somewhere else. And it's highly liquid, right? It can be bought and sold in the same day. So when they look at balancing a portfolio, it's not just asset classes, but you also look at things like liquidity, divisibility, and precious metals offer tremendous advantages in areas that some other investments don't. Now, our third point is its value proposition. You don't confuse it with stocks and bonds. Some people buy it and they look and they say, well, it's not like my stocks or my bonds. And that's true. And that's why it's part of a diversified portfolio. So, you buy stocks for certain reasons, and you buy certain stocks for dividends, or you buy other stocks for just price appreciation. Precious metals are a store of wealth, and people are obviously looking at them for a hedge in their portfolio versus their others. And of course, they're looking for over time for the metals to appreciate in dollar terms. Now, the role we're talking about for precious metals is more important now than it's been in the last 100 years. And regardless of what happens in the day-to-day or the occasional year when the metals may pull back in price, the precious metals entered a bull market going back in 2002. And we'll show how that is ongoing, how there was a big reaction to the financial event of 2008. It's pulled back, but you'll see it really has a trend line that is very defined. Now, in red, I say the beneficiaries of the current system, which we would call the banks, the brokerage houses, the Federal Reserve, they don't like individuals being involved in the gold and precious metals. And they will tell you, like Ben Bernanke, that it's a barbaric relic. But we'll show you how what they say is not what they believe. And I'll submit to you, don't listen to what they say. Don't listen to what the mainstream media is telling you, because it's sometimes not in your best interest. So here's an article. Now, there are a lot of articles like this that this is a headline that you can look at. And as you can see in red, I put the date, so it's something current. It's not old. It's dated of January 31st of this year, so just 2 months ago. Articles like this have been coming out for the last several years. This one was from Bloomberg, but it hits the nail on the head. And its central banks are on the biggest gold buying spree in half a century. And it's 100% true. It's not one central bank, it's all of them. Russia, China, Austria, the U.S. actually is, the U.S. Treasury is actually one of the biggest holders of precious metals in the world, which they did not sell. The Europeans haven't been selling their gold. So going back to what I said a few minutes ago, why, if Ben Bernanke, one of the former Fed chairmen, and they all tell you, no, it's a barbaric relic, you don't need it, trust us, why are they buying it? Now, I could tell you a whole bunch of reasons why, but I think you can probably deduce just by the fact you do what they do, not what they say, that maybe it would be in an investor's, an individual's best interest to do what the central banks are doing. What do they see coming? They understand, they control the monetary system, right? They control the money. So as my footnote says below, central banks control the money and they set the interest rates, right? They manage the global economy and they manage your financial life. And for those people who use their IRAs or are big into real estate, you know how important the central bank is, right? House prices, real estate prices are very driven by interest rates. When interest rates are low, like they've been the number of years, the prices get driven up on the property. What happens when interest rates go up? The properties get hammered, because then the cost of buying goes up, and therefore then the seller must reduce their sale price. So central banks manage the economy. They control our lives through the control of money and interest rates. So, as I said before, if the central banks are in on a buying spree of gold, don't you think maybe you should be considering it too? And that includes the other precious metals like silver. Now, this chart you're seeing, this goes back to 2002. That's a 17-year track record. When I talked about the trend has been up the whole time, you can see that the red line has been the support and the trajectory. Now, some people piled in, and unfortunately for many investors, they only buy when something gets really hot, and then they chase it, and then they get dispirited. So, some people, because gold had gone up so much in 2009 and 10, and silver included, jumped in then because it was spiking up. It was spiking up because of the financial crisis, if we all recall. And then it came back down. But it didn't violate its upward trend line. And as you can see, it's been grinding higher, some years up, couple down, but always staying on trend. So I think you could deduce from this chart, and this is not, sometimes you'll get financial people who are promoting a fund, and they'll give a real small snippet, like a year or 2 years, and say, here's our track record. Well, this track record goes back to when this bull market started, and it's clearly defined that there's an upward trend, there's a defined support level, and you can see that we're safely, we're not in a bubble spike like back in 2010 and 11. So therefore, it looks like it continues to be an advantageous time to be taking positions. Now, I'll also go back to saying, why are the central banks buying gold right now? Do they see another financial event coming like 2008? Are you hearing things, or do you follow financial media that tells you we may be facing another issue similar to 2008? And there's a lot of evidence that points to an event because of debt, because of a host of other problems, because of trade wars, because of a slowing global economy, that we're going to have another event like 2008. Now, even without that, you see gold as a proxy for the precious metals just continues to trend higher on its support line. But if we get the kicker of another financial event, it's probably pretty safe to assume you're going to see a move up equal or probably greater than what we saw when 2008 came. And if you look at that chart, in 2008, you see that unbelievable spike. So as far as the long-term price trends, it is, in my opinion, quite safe to say that the metals are continuing to trend higher, that it's a very defined path, and the fact that the central banks of the world are acquiring gold for the last several years aggressively tells me that the big players, the guys that control the markets, they're not buying gold just because they have nothing else to do with their money. They know something's coming, and that's what I believe in. So now, as Carl mentioned, we believe, and we've proven, and we've delivered something to investors that even goes a step further. So as I say, gold is good, precious metals are good, but we know that diversification within an asset class is also good if you know how to do it properly. So the four primary precious metals are gold, silver, platinum, and palladium. And no one's been able to have a nice, efficient, easy way to buy and sell and actually own the physical precious metals in a turnkey, diversified way. And if you can, what's the advantage? You get a blended return, which is going to reduce volatility. You have metals that move for different reasons, some on supply and demand, some on monetary reasons. And so therefore, the metals don't move in lockstep, and that's why you'd like diversification. You don't want to buy one metal and chase it. right? So people who followed precious metals probably know that palladium has had a tremendous run in the last several years. And that's a key part of the PMC ounce, which we're going to show you. But we would never recommend you don't take all your money and chase palladium. That's how investors get hurt, right? You stay logical, and you have a logically diversified position, and that's what the PMC ounce does. So as Carl mentioned, it's actually received a U.S. patent back in 2013. It's been in the market since 2008, so you're talking almost an 11-year track record. It's all 100% physical bullion. Even though it looks like it trades like a fund or like an ETF, it isn't. It is recognized by the SEC, which is the Securities and Exchange Commission, and the CFTC, the Commodities Futures Trading Commission, as a physical product, not a fund, not a derivative. And it gives you all the advantages we talked about: diversification against 4 metals, liquidity, ease of trade, 100% bullion backed, blended return. It's, basically what every investor should be seeking. It's actually followed and recommended by a number of well-known analysts. One such person is Jim Rickards, who's had a number of bestsellers on the New York Times in the financial sector. Some of his books are The Death of Money, Currency Wars. He also has The Road to Ruin, The New Case for Gold. He discovered the PMC ounce in 2009 when it was brand new, and been recommending it for years, and it's been, I can safely tell you, one of his best recommendations as far as delivering what they projected it would do. And he keeps it really simple. He says it's one of the most intelligent innovations in precious metals investing ever devised. It's devised to give a better risk-adjusted return, and that's exactly what it does. So, to start, here's a copy of a chart that shows right on the homepage for Neptune Global. And that shows you the PMC ounces rate of return versus gold, silver, and platinum. Palladium is part of the PMC ounce. It's not on the chart. And the reason it's not on the chart, palladium has gone up so much that it actually skews the chart when they lay that line over. So the reason it starts at 2008 is that's when the PMC ounce was created. So the PMC ounce is the red line. The whitish line is kind of gray, is silver. Gold is the yellow, and platinum is the blue. Now, you saw for a couple of years, gold and silver were above the PMC ounce. Then they came crashing down. So right now, the PMC ounce is above everything for the last several years. Now, that's the beauty of the blended return. When you look back at 2009, 10, and 11, silver went spiking up, but then came crashing down. That's volatility. When you're managing a portfolio, you want to manage your risk, and volatility is a form of risk. So you can see that PMC ounce holders, they have a better return. They've had a blended return and a less volatile ride, and quite nicely, they've handily beaten gold and silver. Now, if you're wondering how much it's beaten it by, because right now you're just looking at a space, as of yesterday, that's it. So since 2008, the PMC ounce is up 82%, gold is up 52%, and silver 46%. That is not an insignificant difference. So you're talking a 30-point difference between gold and the PMC ounce, and more for silver. So again, the PMC ounce is not actively managed. When you buy it, it gives you a fixed fractional amount of gold, silver, platinum, and palladium. But that blended return is less volatile, and it also just happens to be handily outperforming gold and silver, mostly because of palladium, which is actually only 1.75% of each PMC ounce. But its returns have been so good. Now, at some point, palladium will trail off, and one of the other metals will start to perform. Again, you can't market time. You don't know when a metal is going to outperform or underperform. So therefore, a diversified position in the PMC ounce is what we believe smart, and it's logical, and it's proven itself. So, real simple, we believe, now, we support, again, if a client is more interested in having gold or silver, we can assist with that, in whether it's the gold and silver vault account or bars and coins. Everything we deal in is IRA approved, so all the metals in the PMC ounce are IRA approved. Owning precious metals in your IRA with CamaPlan is easy. We've been working with CamaPlan for 12 years. They've been a custodian that we've used and brought clients to. We've also, the CamaPlan has been the custodian administrator for the PMC ounce since its inception. So it's it's a very, we really have the process down. It's quite easy for those that have a CamaPlan account or looking to open one. You would set your account up with CamaPlan. You don't open the account with us. And then once the account is set up and ready to go and funded, the trade is executed through us, and we deliver the metal to the depository that CamaPlan uses. It also happens to be the same depository we use for non-IRA accounts. That actually is in Delaware also. It's a major non-bank bullion depository where everything is insured. So it's an easy process. The steps are quite easy, but again, it starts with your setting up your account with CamaPlan. So I appreciate the chance to give you that overview, and I really want to hopefully answer some questions if some people can type them in, or I don't know if Carl opens the lines for this. But my name is Chris Blasi. Our office number is there. You can reach me at, unfortunately, the email got cut off. That's supposed to be info@neptuneglobal.com. So if you want to email us, you can also go to our website, which is neptuneglobal.com. I'd encourage people to also go there. There's a lot of information about precious metals and a lot of detail about the PMC ounce, including we have something called the Pmc Calculator. It lets you do a SMOC simulated trade, so you really get to see what is purchased and what you own as far as how much gold, silver, platinum, palladium, what percentage of your money is going to each of those metals when you trade in the PMC ounce. So,
Chris, the other thing that I like about the PMC ounce is you don't have to go in on your website. You give that price in one place. You don't have to go in and figure out what percentage you own and then try to calculate how much your investment has gone up. So that's really nice for people to look at and track the PMC ounce right off of your website.
Well, that's a great point, and I'll just elaborate. So the PMC ounce is directly hardwired into the price of the live market. The PMC ounce price is changing every minute. So anytime the price of gold, silver, platinum, or palladium changes, so does the PMC ounce. Also, to Carl's point, if you've ever dealt with some precious metals dealers, they don't post what the pricing is. So you kind of feel like you're calling and negotiating. We don't do that here. This is an exchange. Everything is key to the market. When you call, you know what the price is. You're just calling to execute the trade. So everything is transparent. It's all trackable. And even with something as diverse as the PMC ounce, it has its own spot price and, of course, its own trading price.
We have one question here. What kind of fees are involved in holding precious metals in your self-directed IRA? With CamaPlan, you can actually go to our website and look at that, but basically there's a storage fee associated with it, and then a small annual fee, and that's based on the amount of gold that you buy. And in the storage fee, the insurance is covered in there. And again, that's based on how much precious metals you have in there. And anybody else, we're getting some questions coming in. If you have questions, please feel free to type them in the questions box and we'll read them. Here's one. I have owned gold for a few years and haven't seen a lot of change in the price. What can I expect for 2019, and what could cause a dramatic rise in the price of gold?
So I'll just, as long as we're on there, the reality is, so the price of gold really beginning in 2017 has been moving up. The overall trend, it's 2 steps forward, 1 step back. So it's grinding higher. Now, so we see that 2019 is just kind of following through on grinding higher. We also look at some of the activity in the market, like aggressive central bank buying, like certain sovereign wealth funds aggressively buying the metals, certain hedge funds taking big positions in the physical, that there's an anticipation by some of what we consider people with a good understanding of what's happening, that there could be another, as we said, another financial dislocation. So, they generally will go into an asset to take advantage of something happening in the market. But even with that aside, as an asset that's built, is designed to be held for at least an intermediate period of time, right? We see the next couple of years, even if just staying on this path, as grinding higher and a good place to store your wealth.
Great. Another question, I guess it's on our side. Are the fees the same for storing the PMC ounce? Yes, it is. It's we don't have anything different in there for the PMC ounce, and that should be indicated on the precious metals. There is a special precious metals pricing sheet, and if you open up a precious metals account or go to CamaPlan.com and look for the precious metals under either forms and downloads, or when you go to open up an account in precious metals, the fee sheet will be there as well. And if you have any questions on that or can't find it for some reason, give us a call at our phone number, 866-559-4430, or info@CamaPlan. We'll also shoot an email there, and somebody will get back to you. Give us your contact information and your number, and we will help you. The next question that's up here is, what are the main economic indicators for precious metals, and are we seeing any evidence of that? And I guess they're looking for forward indicators that are telling us whether it's going to be going up or down. Do you have any of those, Chris?
Sure. So now there's one misnomer that it's the same for all the metals. So what is a driver for an industrial metal like platinum, palladium is different than gold, completely different, right? So gold is generally looked at as how's the US dollar doing versus gold. So in most instances, if the dollar is going up, gold kind of stalls in price. If the dollar goes down, gold goes up. So what we're seeing right, you hear a lot about the inverted yield curve right now, right? Which is saying there's recession coming. And, when the yield curve inverts, it means a recession is close at hand. Now, that's going to be, generally will be good for gold, because once it becomes accepted, this is why they're hearing President Trump saying to Powell, and you hear some people like some of the economic advisors, that the Fed needs to cut rates, right? So what do they do in a recession? They try to stimulate the economy by cutting rates. Well, cutting rates devalues the dollar and drives the price of gold. Now, that will, if you go into a recession, that may take away from the luster of an industrial metal. But that's why you want this diversified position. So the one answer is that each indicator or each driver in the market isn't the same for each metal. But when you're talking about gold, yes, it's about the dollar. It's about what's going to make the dollar strong or what's going to make the dollar weak. And, the current administration is okay with weakening the dollar to help our industrial base as an exporter. And there's already people are saying the economy's slowing. Right? What happened when they raised interest rates a little bit, right? The economy started to slow. So the Fed, who was going to raise interest rates a couple more times this year, said a week or two ago, well, we're not going to raise any more for 2019. That's step one. So first step is they took back saying that they're going to raise interest rates, and now the next step is there's a good chance they may cut them, which will be very good for gold.
Okay, we've got another question here that if you have a limited, if you have a limited amount of money to invest in or limited funds to invest in precious metals, what would you recommend?
Sure. So there's a good example where the PMC ounce comes in, because you can get diversification that you couldn't buy efficiently on your own. It's similar, and I don't want to confuse the two, but like a stock mutual fund, right? If you have a couple $100,000, you can go out and buy a bunch of different issues of stock and build yourself a somewhat diversified stock portfolio. But for most holders, especially someone, with 50,000 or something or less, you really have to use a mutual fund, right? You need the ability for them to efficiently buy a diversified position. So, depending on the resources, you're going to get diversification even with a small quantity of money, $5,000, $10,000 with the PMC ounce that you couldn't build out on your own. I mean, because there isn't that much gold, silver, platinum, palladium you can buy with $10,000, right? So the PMC ounce makes the most sense. If you rather use something else like just gold, silver, platinum, palladium on your own, gold is still the primary precious metal. There are a lot of people who are buying silver, anticipating that silver will outperform gold over the next several years. But keep in mind, silver is a more volatile metal, meaning it spikes up and down more. So gold will move more smoothly than silver. So the short answer is, if the funds were limited and you're going to buy one metal, I'd put it into gold. But I think more ideally, you're better off with the PMC ounce, because you're going to get the diversification that you can't get on your own.
Yeah, hindsight, as they say, is way better. It would have been great to have bought palladium back there, but at least you bought some when you got into PMC ounce. And the other thing is, when you buy that PMC ounce, you're actually saving on the cost of buying 4 different metals, etc. You just make one purchase and you get all the 4 metals, which brings up another question here. With the PMC ounce, where will my metals be located? And is it all, well, hang on, is it all physical? And I'm assuming they mean physical versus ETFs, and how does that work? So we got 2 questions there to answer. I'll let you go, Chris.
Actually, it's you're the custodian, so I can just say, I'll say what we deliver to you, and you can confirm it for the audience. So yes, we don't deal in any derivatives or paper. It's only the actual physical bullion. It's also a term called LBMA approved bullion, which means bullion from specific refineries that the world recognizes meets certain standards, and it's the most liquid bullion in the world. We deliver that to CamaPlan's storage account at the depository in Delaware. So no derivatives, no paper gold, as they say. It's all actual good delivery bullion. And now I'll let Carl confirm that with you.
Yeah, basically what happens is we own or we've rented a part of the depository, and we store all the metals for all our clients in that depository, and we audit it periodically to make sure that it's all there and it matches what our inventory is basically in your account. So you're able to look at it in your account, and we verify that it made it to the depository and that it's sitting there, attached to your name. And that's also one of our streamlining processes, because once it gets delivered there, it's all the costs for shipping, etc., is all included in Chris's final number.
That's a great point, Carl. We do such a volume of business with CamaPlan that there's never any shipping charges when you buy metal for us going to CamaPlan IRA. Yeah. So, that's an important consideration, because shipping precious metals is not inexpensive. Not only is it heavy, but of course the insurance is quite high. But those, you never have to deal with those charges as we move metal both in and out of the CamaPlan account.
Yeah. So the answer to the question is yes, it's all physical, and there's, uh, uh, those four metals are in the vault in our area, you know, tied to your PMC ounce percentages. So that's there. The other thing I did want to say, Chris, and I think you told me that, several years ago, with the exchange traded funds and the paper versus the physical. If you have a fire, do you want a picture of a fire extinguisher or do you want the real thing? So I want people to understand that physical metal is something that you can touch. It's tangible. And by the way, if you want to take it out, all you have to do is give us a distribution form, and we'll give you the actual uh, gold or silver, palladium, etc. that you want, and it'll be distributed to you, and it can be in your hands. We got another question here. You were talking about the inverted yield curve. Uh, what does that mean to precious metals, or what is the relationship to the inverted yield curve? And did you see a move in the precious metals as a result of that inversion earlier this month?
Sure. So as the chart shows, gold has been grinding higher. The talk about recession, a possible recession, started several months ago with some early analysts, and the gold has been moving up because the sequence of events are rate hikes stop, and then they start cutting rates, and that's what we're seeing happening, right? So first thing is Fed comes out, we're not going to raise interest rates anymore. They're doing that kind of buoys things, and probably the next step if we go into a recession will be the cutting of rates. All that bodes well for precious metals. For gold, because at the end of the day, when you start just cutting rates and you try to create money and print money again to stimulate the economy, that continues to devalue the dollar. So that's a pretty consistent indicator of something that will be supportive of the gold price going forward. And, it looks like it's playing out as some astute analysts identified, even 6 months ago.
Great. Thanks, Chris. Hey, here's another one. Gold is exchanged in 167 countries around the world. And what about the other metals in the PMC ounce? I guess he's trying to say, are the other metals as liquid as gold is? Or do you know?
Yeah. Yes, for us, we trade and work with we buy and sell with the global bullion banks and the global wholesalers. With the liquidity we have for all four metals is the same. We're able to buy and sell, which obviously is simultaneously we're buying and selling on behalf of our clients. And we've never had the inability to execute a trade because of liquidity issues. Those four primary metals are traded around the world and are basically treated the same. I mean, one market, the gold is the largest of the markets, right? It's larger than silver, platinum, palladium, but the markets have the same mechanisms and processes to have the same level of liquidity. So we've never experienced a liquidity event with any of those metals.
All right, let me see if there's any other questions. We're running out of time. Chris, can you put up your slide again so that if people do have any questions here, they can get a hold of you, or if can they get information on your website as well?
Yes, I would actually let me just show them the website, which is neptuneglobal.com. Let me see if I can bring this up here. Because also, all right, Carl, can you see that?
Yep,
the website?
looks nice.
Okay. Now, if you look down here in the center, I mentioned something before, and here's that chart we talked about. The Pmc Calculator, you notice I'm putting my cursor on it. This lets you experience this trade. Here's a good example, right? The metals don't move in lockstep. If you look at the ticker going by, the PMC ounce is up 5 cents right now, right? The precious metals markets are open overseas. Gold is down 40 cents, silver up, platinum up, and palladium is basically flat. It says down, but it's 0, 0, right? This is why you want a blended return, right? You never know when a metal's going to move. But this PMC calculator, you click on that link, and this lets you do a simulated trade. You click in this box up here, purchase quantity. Say you type in something like 200. That's 200 PMC ounces. Right below it, it shows you the price per ounce. Below that, the total trade amount. And over here to the right, here's the details. 7 ounces of gold, 187.5 ounces of silver, 2 ounces of platinum, and 3.5 ounces of palladium. And you would say, well, that's mostly silver, but over here, it shows you what percentage of your money, right? Silver, there's a lot of physical silver in it, but silver is a real low price point item. So the majority of their money is still going into gold, close to 50%, and they're the other metals. So this is a great tool to work with. There's also descriptions of the PMC ounce, the vault accounts. Also, the bullion exchange tab has pricing. These are all live prices for purchasing. Also, just standard gold and silver.
Hey, Chris, can you talk a little bit about the vault account? Because a lot of our clients like that because they get it closer to spot price with the vault account. It's a little cheaper and you can buy more.
Sure. So let's, and I'll just look at this, so then I'll shoot over, right? Commonplace, people will buy gold, eagles, and maple leafs, right? And the mints that make them, whether it's the U.S. Mint or the Canadian Mint, they have a premium that's higher than what you would get in the vault account. And the eagle is always more expensive than the maple leaf by about $5. Now, if you remember this number, U.S. Eagle, $1,353. Now you go to the vault accounts. And you look at gold. Even a small purchase of only 5 ounces is $1,323, right? What was that before? That was a difference of $30 per ounce. That's substantial, right? Especially if you're going to be buying 50 or 100 ounces. So, and what's in the vault account is all good delivery bullion, right, from the LBMA approved refineries. Same efficient pricing as with the silver. It's a great way to own and buy a lot of metal, get more metal for your money. Again, especially in an IRA where it's going to be held in the depository anyway. And over here is the PMC ounce is one of the vault accounts. So these are very popular with IRA holders just because of the efficiency in buying and selling it, and also the price efficiency.
But also, if you do want to take that as a distribution, we would convert that to coins at the time of a distribution or bars. Is that right, Chris?
That's correct. We have something called the conversion, the vault account conversions over here, and it shows you all your options, and you could pick all different types of bars or coins and convert that too. So that's the time where if you want to buy a coin, where if you saw like the U.S. Eagle, right, has a higher premium, but you're not sure you really want them, well then want to convert it, then you'll pay that premium. Most people with the vault accounts don't. They've owned the vault account to own the metal, and then when the metal hits a certain price target, that's their objective, they sell. But that option is always there to convert it to a bar or coin for delivery, or just to convert it because that's what they'd rather have in the future. So you're really getting maximum flexibility with that metal, with the vault accounts, and when you stay in the vault accounts, you're getting the most metal for the money.
That's great. Chris, I'm going to cut it off now, and if you don't mind, could you put your last slide up and tell everyone how to get a hold of you for any questions on precious metals?
Sure. You can just call our office and ask for one of the traders. Just so you have questions about precious metals, there's our number. I'm sorry for the error on the email address, but right here it's info@neptuneglobal.com. Also, if you go to the website, there is a contact tab. You could click on that and send in a question or ask to be contacted through there. And again, neptuneglobal.com is a lot of information about us and the products and about the company.
Thanks again, Chris. I really appreciate you giving us your time tonight. That's a big favor to me. And if you have any questions on IRAs or the fees, etc., you can contact me or info@CamaPlan, or you can call our toll-free number 866-559-4430. Precious metals and questions go to Chris. IRA 401k questions go to CamaPlan. And we'll be glad to help. So at this point, I'm going to end the session, and if anybody has any questions, follow up as we just discussed. Thanks again, Chris. Do you have any parting words?
No, I would just say that I think we're in a very good part in this bull market for either entering the market for the first time or adding to your position. I think the charts that I shared and some of the information is supportive of that. We really appreciate working with CamaPlan and clients. We together we offer a great solution as far as using and leveraging your IRA for precious metals. And I just encourage you to reach out to us with any questions, either by email or phone. We love to work and help people out to understand the precious metals market.
All right, thanks everyone. Have a good day or evening.
Thank you.